Welcome back to the Make It Count podcast.
I'm Marcus Mire, founder of Mire Group CPAs and the Total Control accounting system.
And I'm Tyler Warner, small business owner with a lot of accounting questions.
And today we're talking about predicting your small business's future.
That sounds pretty awesome.
Right.
And a better title than what we had originally, I'll say.
Well, that's why I have you.
Yeah.
My title, I don't think, was what you would call a headline grabber.
Yeah, it's fine. But it's to that end, we're going to be talking a lot about the meat and potatoes of things that you need to do if you really want to get an idea of, you know, what's coming in your business, how you can get there, essentially. So, yeah, let's get to it.
Yeah, so we're talking really what you and I, we kind of sat down and said, what are some things people struggle with and to not get in the weeds of accounting talk and jargon? And the thing we kept coming back to, which is the lifeblood of every business, is cash flow. And so starting to understand cash flow in a simplistic form, because I think a lot of things you can do in business, you can overcomplicate. And we're going to get into some of the methods you use in kind of your small business, just some really simple tools that work. But also understand real simple, understandable. Let's say that. But also these tools that you take those tools and you combine them with starting to get a little bit better understanding of the historical financial statements, like the P&L and the balance sheet.
Yeah, and I wanted to frame this conversation around basically, you know, I know this. I'm this way. Kind of storytelling sometimes is the easiest way to kind of really grasp things, and so I thought it'd be good for us to kind of frame the conversation with like a sample business.
Yep.
So we've decided beforehand that we're going to use a pest control company.
Yep.
And kind of through the lens of a pest control company, explain, you know, cash flow, P&L, everything you could do with it.
Yep.
And so, you know, if you're listening to this, try to imagine, and it won't be hard for you to imagine your business in the shoes of this pest control company, because it's just an example, but I feel like that's easier to do in a sense than if we didn't choose anything at all.
Yeah, and I think it'll resonate with people because we're going to talk about, you know, potentially borrowing money to buy fixed assets or a vehicle, costs that vary depending upon the usage, like in terms of a pest control business, chemicals.
Right.
The chemicals are directly tied to the amount of houses you spray. I think people can kind of understand that concept.
Right.
And then to start to talk about, you know, how much you can make per employee, so to speak, you know, the kind of a leverage model. So let's get into it.
All right. So tell us about this pest control, just to kind of set it up.
All right, and I'm going to preface this by saying I don't have any pest control businesses. So if there if there are any exterminators out there who think I've lost my mind or don't know what I'm talking about, I think probably both might be true in this scenario.
And secretly, I'm actually looking to purchase a pest control company, so this is all a ruse.
This is This is in your due diligence period, actually.
Right.
All right, so this is the scenario I drummed up. Okay, pest control owner. He's on salary, $75,000. He's got one tech, kind of a guy out in the field, the nice guy who comes to your house monthly to spray, and he gets paid $50,000. And he's got an in-house kind of secretary, admin, dispatch. I think everybody can relate to that, kind of that jack of all trades back at the office. Okay, they've got 2 trucks, so each guy works in the business. The owner's one of the technicians as well. They bought these trucks for $35,000. They financed them. They're paying $600 a month. And they've got $15,000 a year, $15,000 a year in rent, and chemicals are about 10% of sales, which is kind of, again, I have no clue what I'm talking about on that.
That sounds right.
That sounds right. And then sales of $250,000.
Okay.
All right. So when you do that, let's kind of just get into some quick high-level numbers. On those sales, that amount of payroll, cost of goods sold being the chemicals, you make a profit of $30,000.
Okay, before we move on and then maybe jump into, you know, I'll try not to keep this pace of questions. What defines cost of goods sold? It makes sense to me that it would be chemicals, right?
Yeah.
But like, it wouldn't be maybe equipment.
Correct. Yeah, and I probably said that in the wrong way in terms of a pest control business. You could say your chemicals are cost of goods sold because you use them as you spray them, and so. But I guess my point is most people consider cost of goods sold as like widgets on a shelf, meaning I don't expense it or recognize it as a cost until I use it.
Okay.
So probably a lack of poor wording there on saying cost of goods sold.
All right. Well, I didn't mean to derail.
No, thanks for the clarification. All right, so let's just say that business with all that income and those expenses nets $30,000. Okay. So the first thing to think about is, what did the owner make? Let's just talk about that. That's just in terms of being in the owner's shoes. Well, the owner made $30,000 plus his salary. So I think I said in the example he made 75. Okay, so right then and there, if you want to think, let's think a couple different concepts. His take home is about is 105, the net of the business plus his salary. And that's what he's going to pay taxes on. So this is the first thing we kind of start to think about in terms of small business. What did I make and my cash flow is? What did I take home? What am I going to pay taxes on? That's before we even talk about any kind of other payments.
Okay.
Any questions there?
No, I'm tracking with that.
Tracking with that? Okay. Next thing to do is let's talk about the difference between profit, which I said was $30,000, simply the amount of income less all the expenses, and we kept it real simple: payroll, rent, salaries, and chemicals. The cash flow would be $16,000. And so the difference would be that your debt payments, like I said in the beginning, we have $14,000 a year of payments on these 2 trucks, are not on your P&L. So let's kind of get into that a little bit.
Yeah. That seems like they should just fix that. Every time I've looked at a P&L, and it's always like, oh, wait, that doesn't include.
You're like, what?
I'm like, who's this benefiting? Not putting that in there, you know?
Right. It's because I don't want to get too technical in it. It's because the expense generally would be the depreciation of the asset.
Yeah, all right.
just throw that to the side.
Yeah.
The difference between the net income and the cash flow is the things that don't hit. The things are the expenditures or inflows that don't hit the P&L, and debt service being one of them. The interest would be deductible here.
Okay.
But the principal payments. So first thing to understand is you don't have $30,000 to just grab in that business. You have 16.
Right.
So that's that's already just kind of a thing a lot of people don't understand.
Right.
So from there, what I kind of just look at this is, let's kind of get into what you were talking about in terms of your cash flow method, just to kind of start bridging this gap.
Yeah, I think what's problematic is if you're the pest control guy, is that's like you found that out after you turned all your stuff into the accountant, right?
Right.
So, whereas like oftentimes the pest control guy are, the shoes I've been in is like you're trying to predict, okay, the next 3 to 6 months for me to make payroll, for me to actually buy more equipment or whatever the thing might be. You really need to be able to see, okay, I'm expecting this much revenue from invoices or current contracts or whatever, and I've got this much expenses, but it's mapped out to an actual calendar date so that you can kind of see into the future and see, all right, well, in 2 months from now, if everything goes as planned, I'm going to have X amount in the bank, or hey, in 6 months, if we don't land this contract, we don't get any new business, things are going to look grim. You know?
And I will say, I want to clarify, when you're saying expenses, you're saying outflows.
Okay.
So you're right. I mean, you're meaning everything that's coming out of the bank account.
Sure. I mean,
which again was that point I was making about just not getting into the weeds of accounting too much, but you got to understand there are some things that don't hit your P&L that affect cash flow. So when you're saying expenses, I'm trying to get in the shoes of a client here. I know what you're thinking. You're thinking outflows.
Yeah. See, I think the confusing part about it is I would never exclude debt payment from an expense.
Right.
Because it practically is something you're required to pay.
Right.
So if I'm looking at the future cash flows, I'm building that into it, which
as well you should.
Right. Sounds correct. It's just I need to understand the terminology so that I can understand. Okay, well.
Right. Because what we're going to get into is let's talk about why. Okay, so let's contrast what you're saying, which is okay. I got my short-term cash flow, which is all the pest control contracts we're going to collect on in the next month. Let's just do a month cash flow minus all of the things we're going to pay: payroll, rent, and the debt service.
Sure.
Okay, so those are the outflows. So what doesn't that tell you? I'm going to pose a question to you. What doesn't that cash flow tell you that the P&L will tell you? I'm kind of giving you a loaded question because I have the answer.
Yeah, I mean, I'll tell you impulsively, that's what I would think I would crave. That's the information I crave the most.
Right.
And so I go to that to kind of like make practical decisions, and I try to, if I was the pest control guy and I'm always thinking of growth, right? So I'm thinking, all right, when can I buy another truck? When can I hire the next employee?
Yeah.
When can I get another chemical that's going to be better than the chemical I've got now so I can charge a premium or whatever it might be.
Yep.
And I'm looking at that and saying, okay, well, I can do it in 2 months because I'll have the cash to do it.
Right.
So what it doesn't tell me, I guess, is anything outside of that.
Yeah. Know? So the thing that kind of came to mind is why you need both. This discussion is we're trying to bridge the gap between this kind of cash flow planning, which a lot of people do, and a lot of software does. And I do it in my business too. I do a lot of kind of just, quick shorthand, like, okay, what are we going to have if we spend this much, and we make this much, or I would say collect this much. But the thing it's not showing you is how profitable you are in the sense that, okay, this truck, let's take our field tech in the example. I said he makes $50,000. His truck costs $35,000, so that's $85,000. Throw in some payroll tax of about $5,000 on 50. So what's that, 90? And his truck brings in 125 in terms of like his route, I should say. So that is nowhere in your discussion. It's kind of baked into the fact of what your ultimate month-end cash will be.
Right.
But it doesn't tell you that you could go right now, if you had the structure in place, and just hire another guy.
Yeah.
That, generally speaking, other than the fronting of his payroll, which would be in your short-term cash flow, because you'd be thinking, okay, I gotta service this, I gotta pay this guy for a month with no revenue.
Yeah.
But you're not. But what it wouldn't take into consideration is, but it would easily pay for itself.
Right. I understand.
That's where the profitability comes in.
This may be podcast gold. It's like the difference between like just having enough gas in your tank to keep the car going versus like understanding the fuel efficiency and like more nuance of what in the engine might be causing more gas to be burned or not.
Or let me give you a better example. Just to use the
real
gas
podcast
terminology.
Gold.
Yeah, real podcast gold. Better terminology. Okay, let's say in your example, you've got $5 of cash to buy gas, and the gas costs $4 a gallon. But you could go borrow $20 and pay $1 per gallon. And you know that somebody's going to pay you in a week $22 because they owe you money. You would just go, oh man, I'll borrow the $20, pay gas for $1. You get what I'm saying? Like that's getting into profitability versus short-term scarcity of your cash.
Right.
So your cash is limited, and man, I can only buy $5 of gas.
Right.
But you just step back and go, but hold on a second. If I just do this other method, I can buy gas for $1. I just have to be able to weather that storm.
Sure.
That's the P&L tells you, can you weather the storm?
Gotcha.
It tells you how profitable you are because you and I both know this. The P&L is not your cash flow, but it generally is going to tell you what your cash flow will be. Because it says, here's what I made, here's what I spent. Whether I've collected that or spent that, or I would say, here's what I made and here's what I'm going to spend if you're on an accrual basis.
And so to maybe make sure that I'm tracking with you, like in that scenario, you're looking at the P&L and you're saying, okay, this pest control exterminator, it costs, his salary is X amount, his truck's X amount, but he bills a year X amount.
Correct.
And then I can look in the P&L and see all of that information combined.
That's right.
And then anticipate, all right, well, the difference was, let's say $20,000 or whatever. I can anticipate, okay, well, that's $20,000 in cash flow.
Right.
That I should be able to expect.
Over time.
But
admittedly, back to the example you give, admittedly, the $20,000 might come at a cost of a fronting of a 2-month salary.
Right.
So that's where you have to understand, like, okay, and this is where some of my clients that are the best kind of nuts and bolts, common sense business owners get this concept, which is, okay, I know, relatively speaking, that new truck and that new route is going to make me $25,000. But it might cost me $6,000 at the beginning.
Right.
What do I need to do in my risk tolerance to make sure that I can handle the $6,000? Meaning, when I say risk tolerance, some people say I don't want any more debt. Okay, I understand that.
Yeah.
But some people might say, okay, no, I'll take on some debt, or I have the cash.
Right.
Whatever that looks like.
Yeah.
The understanding of that 25 is going to come to roost at some time, and all you had to do was front 6.
Right.
And that's where the P&L and the profitability come into play in conjunction with the short-term cash flow.
Yeah, the one kind of chases the other.
That's right.
Kind of constantly.
Yeah.
Yeah, and I think that is a good point to make because I've traditionally been a little bit more like debt adverse because I've had professional services companies that don't have a lot of assets tied to them.
Right.
So, it's a little, in my opinion, you don't want to go into too much debt
Right.
if you're just selling time, essentially.
Yeah.
But that's probably why I've leaned so much on the cash flow, because I haven't thought of the point you brought up earlier of like, okay, well, yeah, it's a no-brainer if you can borrow that and with predictability that it's going to return.
And that's where and then it's kind of the nuance to it is then you just get into more of your tolerance.
Mm-hmm.
And do I want to deplete my cash to front? We keep using this route as an example, but I think it makes the point.
Right.
Think about your new employee you want to hire in a marketing business. You want to go in this new line of work where okay, in your business, we're going to go horizontal. I never had a web guy. Now I got a web guy. I know he's going to bring in $100,000,
Mm-hmm.
but it's going to take me some time to get that 100, but I got to pay him 60.
Right.
So the 40's there.
Yeah.
It's just when.
Yeah.
Yeah.
And the pest control example, I mean, there's a lot where my mind goes too. It's like, okay, if you're going to acquire another company,
right.
And you can kind of see, all right, I don't know if they call them routes, but it makes sense.
Yeah,
that they would,
a route.
Okay,
Yeah.
Our contracts. I've got 40 new homes that I'm going to acquire from this other business that are already have contracts.
Right.
Then you're going to have to pay to get that, but you can see already where that where your cash flows would be.
Absolutely. And then you start to understand, like, again, I don't think these are kind of accountant talk, but you start to understand like variable cost versus fixed.
Okay.
So let's give an example. You start, and we've been talking the whole time about variable costs, meaning costs that go up in relation to revenue. So a perfect example is every house I spray, I use chemicals. I don't spray a house, I don't use chemicals. The chemicals vary with the usage.
Right.
And if I have a route, if we keep talking about, I need a guy. So that guy, so every time I add a route, I add a guy, I add a truck. Those are all variable costs. But what we aren't talking about is fixed costs. So the rent is, as long as adding a new route doesn't make us operate in a new location, well, all we have to worry about are the variable costs.
Mm-hmm.
We just have to say, in our example, if we think he's going to bring in 125, does 125 exceed all the additional costs that come with that guy?
Right.
Because the fixed costs are already covered. So again, you start to get into these concepts in the P&L and your cash flow in tandem. And I think that's where the gold is.
Yeah. So how often do you recommend, like, I'll say this, the cash flow that I described, like that spreadsheet that sort of looks into the future, I almost check that daily, certainly
Absolutely.
weekly, because, obviously it changes the closer you get into real time.
Right.
Admittedly, I don't look at the P&L as much.
Right.
And historically, like when I had a bigger business or managing more things, I still didn't. It was maybe,
Yeah, I think the missing
quarterly at best.
Right, the missing piece is you don't understand why in detail, which you have to get there, why your cash flow is what it is. You understand what makes up your cash flow, but you don't, I'm saying you, generally business owner, don't understand why it is. And that's why I think it's good that we're given this example. We have to understand why the cash flow is what it is. Why is it? It's because your P&L tells you what your cash flow will be.
Gotcha.
Your P&L tells you what you're going to bring home on your operations. And then you just subtract from that, generally speaking, the debt payments, and that's the amount of cash you have left.
Gotcha. How intuitive is surmising that information when you look at your P&L? Is it based on just how you've entered the data? Or, P&L, the ones I've seen and the ones I've generated, it's basically just groups of categories.
Right.
Is it take a second look, a more closer look to do the scenario we talked about where you're looking at, okay, X guy is costing me X amount for his truck and...
Yeah, usually it just depends. I want to clarify a couple of things. We're saying P&L a lot. That means profit and loss. Just for, so we don't use too much jargon. Profit and loss statement or an income statement. They're synonymous. They're used interchangeably, but people say P&L. So, but to your question, a lot of things are grouped in the accounting software unless you have some foresight and want to do a little bit more analysis in the way you set your accounting system up. So I'll give you an example. We use Xero. We talk about that a lot. One thing you could do in Xero is you can create what's called tracking categories. And in this business, you could have a tracking category for each, I'm going to call it a route. I don't know what else to call it.
Yeah, that's fine.
Each route. And then you would know, okay, you could run that P&L, which was essentially be the totals broken down into columns.
I see.
So now you could then see, okay, if we were doing our accounting properly, which wouldn't take much effort and it could be set up really easily, to then show, okay, I know Route 1 makes 100 grand. Why does Route 2 make 70? Well, we're starting to notice that he gets the 7 houses instead of 8 every day. Mm-hmm. Okay, what's his issue? Do we have him spread too far? Is he going to?
He needs a faster truck.
He needs whatever. He needs a sports car.
Yeah.
But you get what I'm saying. So now you're getting into nuances of data.
Okay, that makes a lot more sense to me. I think I'm probably never drilled down or organized it enough. And I will say, for all the people like me on the other end, you can make your own chart of accounts. Chart of accounts is the categories.
Chart of accounts are that's right, the accounts that make up your financial statements.
Yeah, believe it or not, you'll appreciate this. I think I've mentioned this. When I first started in business, I thought those were like handed down from the government. Like, because I had only ever had to turn that into like an accountant, and I just assumed like, oh, well, is this like a legitimate category for like the government? And you're just like, no, man, you can call them whatever you want.
Well, I think what you have to understand is within reason, I say within reason, you'll get my point. You make up your financial statements so that they make sense for you to run your business.
Right.
Now, there can be overkill. I have a client who has a 6-page P&L. It's a bit much. It's too much information.
Yeah. He doesn't get a badge when he comes in? That sounds like...
No, he should get a spanking. No, literally, we laugh about it. It's like his 6-page P&L. The guy who's listening to this, he will know exactly what I'm talking about. He will laugh because he knows. He goes, "That's just how I want it."
Yeah.
But back to his point, it makes sense to him.
Right.
But you can do things reasonably.
Yeah.
Speaking that makes sense for you to manage your business.
Yeah, I only threw that out there because, like, and we've joked about how, like, when you get in business, like, you just go. Initially, it was like you get QuickBooks, you do the
and
things.
they give you a canned chart of accounts.
Yeah, well, exactly, and you just assume like, okay, there's nothing about that form that looks like, oh, I'm free to do what I want with this. It just feels so official, like, all right, I've got to make my stuff fit into this.
That's right.
You don't realize that it's a tool for you until you have a conversation like this. So
yeah, no, it's I think I'm glad we're getting off into the concept of, like, we're drilling down a little bit from cash flow and profitability being on the income statement or P&L, and then understanding that once we get that footing, I understand my P&L. And look, guys, I have clients who are not accountants, obviously, and get this stuff. This is not a barrier to entry. In fact, you can't. What I always say is there's certain things in your business you can delegate. You cannot delegate the understanding of your numbers. You just can't.
Right.
If you watch any show, you watch Marcus Lemonis on The Profit, he says you got to know your numbers. It's so true. I don't care if you're running an ice cream stand or a car wash or a manufacturer that does $100 million of revenue. If you don't know your numbers, you don't know your business.
Yeah.
But it doesn't have to be a daunting task. You can get some things that you understand conceptually and from a common sense standpoint that makes sense to you. And if they work, do those things over and over and over.
Right. Well, good deal. I think that's a great place to end it. Check back in with us next week for another episode. We'll be airing this on all the major podcast platforms.
Yep.
And if you do need help with your accounting and want to get more information and insight, go to mire.group. And there's a self-assessment you can take there. That's a great little quiz style. Yep. Yeah, it's a quiz. And you can go through that, and it'll give you basically an assessment on kind of where you are and what the next steps are in sort of getting your accounting straight.
Right.
And go ahead.
Yeah, I was going to say, just most people know, but it's MIRE.group. Only slice of the world where it's Mire is where we're at in South Louisiana. But every one of my friends from across the country is like, Marcus Mire. I'm like, hate to tell them, but it's Mire. But yeah, the website's a good spot to go.
Yeah, and for our Chinese listeners,
right.
Yeah.
Yeah, this has gone multinational, I'm sure.
Exactly. So Mire, MIRE.group.
Yep.
Go there and get started. You can take the self-assessment. You can find out more information about the Total Control accounting system. It's a complete roadmap that you've designed to kind of help any small business owner really go from where they feel like their accounting is in chaos to find total control in it and really get a handle on their business. So that's a wrap.
See you next time.